as investors, we always want to buy stocks at the bottom. People come up with charts like this, technical analysis charts, to try to predict, will a stock go up? Will a stock go down? Will it stay sideways? We try to come up with plans for the future that are honestly a lot of times ill-advised. And I did just one thing that I thought was incredible in 2022, which was this purchase that I just made of $83.60 per share at 100 shares of Google stock. Now, I am normally not this bullish on doubling down on my position. I had 100 shares, this doubles down, now it increases it to 200, and I bought my shares at $83.60. Let's pull up Google chart here. This is the last 2 years or so of Google, and you see it's hit highs of even as high as $152, and I could have been buying the stock at $150, $130, $190, but I bought and doubled down on my position right here, $83.60. I bought at the absolute bottom. Now, how did I do that? Did I have some magical power? Did I have some trading genie try to predict where the stock market or this company in general is going? Well, no. That's what I'm going to talk about in this video. You could be a technical trader, you could be a fundamental investor, and we're going to talk about the key differences and how you can utilize one, the other, or both to try to buy stocks at absolute bottom. Because it's not very often that you buy companies like this perfect. A lot of times you try to buy fundamentally based on the company's prime value, its actual net value, the value it creates to shareholders, and trying to predict that into the future where the company's going. Now, I have lots of projections on Google. I have my little spreadsheet here, and the reasons why I invested in Google is basically based off of these spreadsheets. If you want to look at this, you can pause at any time, but this is basically my past and future numbers on what I'm expecting for Google stock. Now, whether I'm looking at fundamentals, whether I'm looking at technicals, we will determine in this video which is more important, which one I'd utilize more, and what led me to buy this company at rock bottom. Thank you for tuning in, and guess what? If you haven't seen me before, now is the chance to get in on the channel while we're still on the ground floor and growing at a rapid pace. We're having exponential growth. If you want to see the companies I invest in directly, I share them down below in the description, which are right here. M1 Finance gives the opportunity for $10 for signing up. You'd help support me in the channel. 133 people have done so far, so check that out. But even if you don't, I still utilize my opportunity. I utilize my platform by showing you guys my portfolio balance. 41,214 is what we are sitting at today. And if you want to see my balance over time since starting YouTube, I'll show it right here, like I do on every single video. This is my balance since starting with $1,500. Here's my holdings, which currently has about 21.9% in Google, the video we're making about today. And then, of course, my performance compared versus the indexes, updated at the first of the month every single month, and I'm beating all the indexes other than the Dow so far in 2022. So it's been a pretty decent year, at least as good as it can be in a time like 2022. Without further ado, let's go ahead and jump straight into Google stock and how I managed to buy this company at rock bottom valuations. Google has grown. It's been a great company. They've grown top line revenue, they've grown bottom line profits, and overall it's been a great stock. They're buying back stock in a major way. They have huge piles of cash on the balance sheet, and we're going to all talk about that in a second. But the first thing we're going to talk about is something I almost never do, technicals. Technicals is something that is basically never brought up on my channel, and it's one that I typically think is a facade. It's fake. It's not realistic to be an investor when you're looking at technical analysis. Technical analysis is for traders, not investors. We'll go over the key differences in this video. For example, if you pull up here and we look at the indicators, let's pull up RSI, which is Relative Strength Index, and MACD, which is Moving Average Convergence and Divergence. If you look at these two, RSI says that it's under 30, which is typically a strong buy signal, and you look at the MACD, you can see the divergence here, which typically means we're going to see a rally back up since it got so far into the red. You also see other things like volume spiking. The VWAP, the volume weighted average price, looks pretty good as well, and in general, all the technicals pointed towards the stock bottoming, which it did, and I picked up my shares at rock bottom prices. Now, did I use these mythical numbers? Did I look at MACD? Did I look at RSI? And well, the funny thing is, when I looked at these, when I was buying these shares, I almost laughed. I was kind of like, huh, it's funny, I never look at technicals, and this is even saying that it's probably at a bottom. But what I was really looking at was fundamentals. What are fundamentals? What is the difference between a fundamental investor and a technical trader? The two words there, trader, investor. What are the differences? Well, a trader is someone who's on the technical side. They're looking at things like moving averages, charts, indicators, oscillators. These are the things that technical traders are looking at. Well, I'm a fundamental investor, someone who's focused on the long term. I'm focused on things like industry analysis, economic conditions, future profit outlook, company analysis. That last one, company analysis, is the biggest one. Now, fundamental analysis is very complex and it goes so deep. There's really the one thing that sucks, honestly, about being a fundamental investor and trying to explain it to others is that it's so in depth, it's so broad that you can't do it in a 10 or 12-minute video like we're doing it today. If I were to make a video just dedicated to fundamental analysis, it would be at least an hour long. If I'm being 100% honest, it would probably be multiple hours long, right? This thing would not be able to be covered in 10 or 12 minutes. And there's multiple ways to analyze companies. There's top-down analysis, there's bottom-up analysis. And to be honest, I don't really think it matters which one you're using. What you really need to focus on is, are you evaluating your companies correctly? Are you looking at your investment? Are you considering downside? Are you looking at all the opportunities, all the outside third-party factors that could affect your investment? And that's what I want to talk about. There's two major things that go into an investment for a fundamental investor, and the first one is qualitative. What is the qualitative? Now, the qualitative is for something like Google. You think, okay, is Google search going to be growing? When I type in Google here and I type in something like men's shoes, okay? When I type in men's shoes, Google just made some money. Look at this. Advertisements from Nike, advertisements from Men's Warehouse, advertisements from Allbirds, Adidas, whatever. Google just made money off of that search. Will things like that continue? In my opinion, yes. Will YouTube, the video you're watching right now, will that continue to grow? And other opportunities like their Google Cloud business or their other bets, their driverless vehicles, all types of stuff. That is the thing that are the qualitative. The qualitative aspects of the business is like moat, the competitive advantage, the guidance, the CEO, what is the attitude of the CEO like, the board of the directors, the overall governance of the company is what is important for the qualitative. Now, what I show a lot more of on my YouTube channel is because it's so easy, and I'm such a numbers nerd, guys. I'm such a nerd when it comes to this stuff, is the fundamental investing side with quantitative, which basically means the numbers. And these are equally important. These are 50-50 split between the investment in terms of importance, on my opinion. Now, I don't have all my notes yet built out on Google. I just started this. But for example, my other large investment, Amazon, I have a ton of notes on. All of these are qualitative, talking about them raising Prime membership, talking about Grubhub being added to Prime, talking about their new robotics products that are coming out, the dominance of AWS, the e-commerce business, the partnership they just made with Hawaiian Airlines, the $500 million investment they just made into an India-based e-commerce company are all qualitative aspects of the business. Now, quantitative is the numbers, and this is what we look at, and this is what I typically show on the channel, like free cash flow growth, one of my most important, most fundamental investment metrics that I look at on a day-to-day basis. Now, if you don't know these three financial statements, let me give you a quick 30-second summary of each one of them, because these are key. The balance sheet. The balance sheet is the financial health of the business. This is same like when you look at yourself, when you get your paycheck and you say, how much can I put in my savings? How much can I put in retirement? How much needs to go to bills? How much needs to go to debt? How much do I need to put on my mortgage? All these types of things that you're asking on a personal level can be asked on a business level. Now, Google, in my opinion, one of the main reasons why, if we hop over here and we look at my holdings tab, the reason why it's one of my largest investments is not just because the business is growing, not just because it's a wonderful company, but it's also because the company has, in my opinion, the best balance sheet in the world. Look at this debt pile. You might be thinking it's really big. $10.5 billion? That's a lot of money. Are they going to be able to pay that back? Well, when you compare it side by side to their cash pile, see that little bitty red line? Go ahead and squint your eyes, zoom into the screen and pause if you need to, because that little bitty red line down below is the debt compared to the giant green bar, which is the cash. The net cash position of Google is over $100 billion. $100 billion can reinvest back into the business, can buy out other companies, and as of late, what Google's really focused on is buying back shares in a big, big way. They announced just in April of this year that they're going to be buying back $70 billion of the stock, as you can see right here, what I'm highlighting. And this is something that creates value opportunities for shareholders, and the fact that they have this $100 billion gives them power of leverage. Now that's cool. The income statements, that focus on mainly like top line things that you typically see on earnings report. Revenue growth, EBITDA growth, net income growth, earnings per share. These are the type of things you typically see on net income charts that give you just a quick snapshot of the business if it's growing, shrinking, heading in the right direction, direction or heading towards bankruptcy. Cash flows, one of the most important ones in my opinion, and one I've used a lot more over the last couple of years. This is actual cash in, cash out. This is not like net income. Net income can be affected by things like amortization, appreciation, but there's so many different things that can affect net income, but free cash flow is only cash in, cash out. If this hits free cash flow, then they have actual money that hits the checking account that they can use. That's what I'm looking for. And these are the three things that qualitatively and quantitatively investors should be using on a day-to-day basis if they're going to risk their money in the capital equity markets. Now, if you're a trader or you're an investor, I think that both of them have their merits. If you're a technical investor, if you're a technical trader, I'm not knocking you. If you're a fundamental investor, that doesn't mean you're superior. I don't think that I'm better than anyone else. However, if you are going to use technicals, it can give you opportunities for the short term, like buying rock bottom prices like this, but fundamentally, it'll give you these long-term charts of long-term growth like this, as you see for Google over the next 10, 15, 20 years. So overall, this is the opportunities you should be using. If you want to use technicals to predict short-term, great. But fundamentals should be used for long-term investing, and it's how I used both of these as my chance to buy Google at what I consider to be the lowest price we'll ever see. That's right, not just this year, not just next year, but this is the lowest Google price will ever be. We will never see this company after 2022, 2023 ever be below $100 again. That's my stake, that's my claim. Save this video, come back to it in 5, 10 years, but honestly, in my opinion, it's the truth. Do your own financial advice, do your own research, but that's my opinion. Thank you guys so much for watching the channel. Thank you for sticking to the end. You watched all the way to the end. Why are you not subscribed? Sign up with M1 Finance. You get $10 free for signing up. And without further ado, my name is Jordan. I'm a Millennial Investor, and I'll catch you guys next time.